What's going on, you guys? My name is Daniel, and here on this channel we talk about stock market investing. And in today's video we're going to be talking about Health Technologies and just the recent news or corporate update that they provided. I think this is very useful for us as investors to understand, and it gives us a good picture as to where Health is headed in the future. I'm super bullish on this company still, and even more bullish with this corporate update. And I think that investors are also bullish with this corporate update because we saw the stock price go from its levels around $6.80 all the way up to $7.65 and probably climbing next week as well. There's been quite a bit of cool down in the telemedicine space as well as the digital health space because there was a huge run up in the fall so far. I think the cool down was warranted because stocks can't just go up forever and continue running day after day, month after month. There has to be a period of consolidation when the company gets a bit of time to actually execute on the plans that they released in the news articles. And it's very difficult for a company to continue to release news after news that just shows the revenue is growing rapidly, especially if they're doing it in the span of like weeks. So for Health Technologies, I think they took a bit of a breather in terms of their acquisition sprees as well as their capital raises to spend some time focusing on integrating the businesses that they acquired into their core business units. So for those of you guys who don't know what Health Technologies is, they're a company focused on consolidating and modernizing clinical and digital assets within the healthcare sector. And they're mainly a Canadian-based company. However, they have started to expand into the US with their acquisition of Circle Medical, and that actually closed in, I think, Q3. So over the span of Q4, Well has closed 7 transactions, and this has propelled the company to an annualized revenue run rate of more than $94 million. For those of you who have never come across the term annualized revenue run rate, here's a definition for you. ARR helps project future revenues for the year based on your current monthly revenue. It assumes nothing changes in the year ahead, no churn, no new customers, and no new expansion. And I think this 94 million is very key for us as investors because this shows us in the next year, Well is expecting to earn around $94 million if they don't make any new acquisitions and their business performs just as it did in the previous year. And with the current price of the company or the current market cap sitting around $1.21 billion, this puts them at a price to sales ratio of roughly around 12 to 13. In previous videos, I showed that Health had price to sales ratios of around 17 to 25 depending on when you were looking at the company. So with a future price to sales ratio of 12 or 13, I see the company right now, even though the stock price went up from the $7 range to $7.65, as a fairly valued company going forward. And I think that I will probably continue averaging in this next week before the stock price continues to run up. On the digital health apps business unit, Well is thriving with significant sequential organic and inorganic growth experienced in Q4. And this is mainly due to the acquisition of Circle Medical as well as Insig. And both these units showed strong performance and turned into profitable results for the month of November. So we can see that their telehealth units have shown that they're able to be profitable, which is a huge milestone for Health Technologies, as well as for those of us who are investors in Health. Before they were losing money, and I think this was just based on all the development costs, as well as all the upkeep costs that they have to do for these platforms. But now being able to turn a profit means that this business going forward is probably going to continue to show profitability and ultimately add to the bottom line of Health Technologies. For the allied health business unit, Well's been seeing an increase in revenue year over year by 40%. Moving on to the cybersecurity business with their acquisition of Cycura, we can see that it's experienced its best month to date under Well's ownership in November. They don't give the exact numbers in terms of its growth. However, I expect it to be not as good as maybe 40%. Otherwise, they probably would show that. They just kind of gave these vague words of exceeding expectations in both revenues and profits. Under Doctor Care, the company's billing and back office business, they also had a strong month in November where they saw revenues increase by over 30% compared to November last year. And in December so far, they're on track to receive its highest month of sales in corporate history. So Doctor Care is also continuing to boom as a business unit. For those of you who are looking at these numbers of 40% and 30% and probably thinking like, these numbers aren't that great for a growth company. And you're absolutely right, because most growth companies around the $1 billion mark are probably growing at a 50% to 100% or even 200% clip year over year. And if we look at Well Health Technologies growth year over year, based on the quarters, we can see that they had the huge growth in one quarter here back in 2019 by 6,000%. However, that growth has really dropped off in the past 3 quarters to around the 40% mark. But I think that we can't just look at each individual business unit's growth year over year. We also have to consider that Well Health Technologies is growing their revenue with acquisitions. And this is essentially how they increase their annualized revenue run rate to more than $94 million from an annualized revenue run rate of $49 million in Q3. So they essentially almost doubled their annualized revenue run rate in one single quarter. And this is one fact that I wanted you guys to take away from this video. So this is why I'm super bullish on Well Health Technologies. They were able to increase their annualized revenue run rate by 100% in a single quarter through 7 acquisitions. So who knows what's going to happen going forward, especially with their previous capital raise of around $80 million. This should allow them to continue their acquisition spree in the coming quarters and increase that annualized revenue run rate to maybe $200 million by the end of next year. With that, if they have a $200 million annualized revenue run rate, that would put their future PS ratio at somewhere around 5 to 6, which is extremely cheap. So that's why I'm going to continue buying Well Health Technologies as long as it trades between $7 to $8. And if it goes above that, I'll definitely have to reevaluate my strategy for Well Health Technologies. I may average in if they continue to release different news that shows the business is picking up. But ultimately, for Well Health Technologies, I like my position right now, and I'm going to continue trying to make this position around 30 to 40% of my portfolio. Just as a bonus for you guys who love technicals, this is my technical analysis on Well Health Technologies. So here we can see I drew quite a few lines on this chart here. So the first one we're going to go over is this green dotted line. So you can see here the green dotted line, these 2 lines are parallel, which shows a downwards channel. So you can see that Well Health was actually trading downwards, and it was trading between these 2 green lines. So if you guys were savvy enough to pick this up, you would note to buy here and sell here, buy here and sell here. So I didn't actually manage to do that because I wasn't super sure about this trend, but this is the trend that we saw if we're looking backwards. Now the next part of this analysis is these 2 red lines that I drew, as well as these other colored lines. So I see this blue line as a support level as well as a red line, so they're in line. We can see in the past that it bounced off the $6.70 line right here, it had to bounce off here, as well as it bounced off multiple times in the past couple of weeks. So you can see there's a strong support at $6.70. So if it does come back down to these levels, you should know that I'll be buying here. There's also another resistance level that we see here at the $7.50 level, which we saw it bounce off here as well as here. The $7.50 level may act as a support line, and we'll have to confirm that in the next week with the trading that we see. We can also see that volume is picking up here, so there's a lot more bullishness towards Well Health in the next coming week, I think. This other line that I drew here at the $8.70 level is the line of resistance. And this is where we saw Well Health Technologies sell off previously. So I think that if it does end up hitting this line, it may trade range bound between the $7.50 level and the $8.60 level for a little while. And if it does break above, be sure that Well Health Technologies is probably going to shoot up to about $10 or so. Anyways, that's my Well Health Technology update for you guys. If you enjoyed this video, smash the thumbs up button, subscribe, and hit the notification bell if you guys are new here. If you want to learn more about Well Health Technologies, check out these videos right here on the screen. If you're there, I'll see you there. If not, keep up the grind and have a great day.